Welcome everybody into the Peach State Federal Credit Union CSE Zoom room. I am Georgia Peach proud to be here today with Scott Rowland and Brooke Westbrook. We are going to talk to you today about Mortgage 101, and I'm really excited because Scott and Brooke have invited a few of their friends into the Zoom room to talk with you about how to prepare for home ownership and what does refinancing look like. So Scott and Brooke, come on in the Zoom room and tell us who you've got here.
Hey, good morning. Thank you, Deirdre, for the introduction, and thank you for helping putting this webinar together. My name is Scott Rowland, and I am the Regional Business Executive for Peach State in the North Georgia area. My territory includes Habersham, Towns, Union, Franklin, and Stephen counties. And my role is to grow existing and create new relationships with individuals and businesses to further grow and expand our member base. I work closely with our Business Development Coordinator, Brooke Westbrook, and so I'd like to introduce her. So Brooke, say hi and tell a little bit about your role.
Hi everyone, I'm Brooke Westbrook and I assist Scott in the region for business development. I am also the business development coordinator, so I do a lot of back office reporting, and I'll hand it back over to Scott.
All right, great. Thank you, Brooke. Now I'd like to thank each one of our attendees that will be watching this video, and thank you for also to the guest that I'm about to introduce. And first is Jim Dymek with Members First Mortgage. So Jim, would you like to tell a little about the relationship between Peach State and Members First?
Hey Scott, yeah, hey, thanks for the introduction. My name is Jim Dymek and I'm with Member First Mortgage. I am the Southeast Production Manager for Member First Mortgage. Member First Mortgage is a credit union service organization, and all we strictly do is do mortgages, and we are wholly owned by 13 leading credit unions. We provide mortgage services to the credit unions and their members. We are the company that has a relationship with Fannie Mae, Freddie Mac, FHA, VA, USDA. We've been around since 2001. We've got headquarters in Grand Rapids, Michigan, but our local office is here in the Kennesaw, Georgia area. And we are licensed to originate mortgage loans in more than 40 states across the country. And currently right now, we have 150 credit unions that we partner with, including Peach State. And it's been a great partnership that we started since December of 2019. So thank you.
Great, thanks, Jim. And next guest is Shadante Butler with the Federal Home Loan Bank. So Shadante, would you like to share about yourself and a little about your role?
Yes, thanks. Thanks, Scott. My name is Shadante Butler, again with the Federal Home Loan Bank of Atlanta. My title is Community Investment Business Development Manager, and essentially what that means is I help our member financial institutions, such as Peach State Federal Credit Union, take advantage of our affordable housing products and services. So a little bit about Federal Home Loan Bank of Atlanta. We are a cooperative bank. So what that means is we are owned by our member financial institutions. We provide funding to support the affordable housing and community development needs of our member financial institutions and the communities that they serve. And the reason why I'm here today is because what we also do is allocate 10% of our net earnings to affordable housing. And so part of that is we allow funds to be used for down payment and closing cost assistance. So I'm excited to have the opportunity to talk more about those programs today. Thanks, Scott.
All right, great. Thanks, Shadante. Now, next, I will hand it back over to Brooke and to talk about some other ideas.
Guys, I was just going to invite Jim to join this conversation. Jim, would you like to talk about some benefits of buying versus owning?
Yeah, absolutely. Again, thanks, Brooke. I mean, there certainly are plenty of advantages of owning versus renting. And so what we'll do first is, click on that pros and cons of owning, and we'll kind of, talk about some of those. Probably the biggest pro of owning is that it's a good long-term investment. Many reports show that, over the course of 10 years, people are actually creating equity in something that they have, and that's what home ownership provides. It's like a big giant piggy bank. So over time, it's a great long-term investment. And then what goes along with that is you're building equity. It's you buy a home right now, and then 5 years later, you're able to appreciate that appreciation from the home, and so you've got equity that builds up. And then also too, there can be some federal tax benefits. Mortgage interest is and always will be deductible, but it just depends on when you're doing your tax returns to see if it makes sense for you to make that mortgage interest deduction, just because some of the changes in the tax code, there's a there's some standard deductions now that you may not want to, deduct your interest, and I would say just consult with your accountants. Another big pro that a lot of people really love about the home ownership is the privacy. So if you want to turn up that movie, or if you want to turn up your stereo, or if you want to make some improvements to the home, paint it here, and do some things here and there on the house to really improve the the visuals of your home, you can do that, whereas you can't do that in apartments. And then what's really nice too is, like, you have a fixed rate mortgage, and so you know what you're going to be having to pay for an outlay every month. And so with apartment, that's not necessarily the case. And then the other thing too is, like, and when people buy homes, they tend to be more involved with their communities. And so whether it's you're raising your family or just, whatever, it's just a great thing to be part of a community. And so you become more invested in all the goings on of your community. So those are the pros.
What are some cons of owning?
Well, there's no cons. No, really. Actually, there really are. So, one of the cons that Shadante Butler is going to address with Federal Home Loan Bank is some of the upfront costs. So, most loan products, there are some that don't require a down payment for your conventional loans and your FHA loans. They require either 3 or 3.5%, but that's part of it. There are typically closing costs that go along with the home ownership. And so in addition to your 3.5% down payment, you might have to pay some of the closing costs. But again, Shadante will talk about that. Maintenance costs. Well, when you own something, it's like you're responsible if that, if you have a, washer or dryer that goes out, you've got to pay to get that fixed, or you might have to put in a dishwasher. And then, one of the other cons is that, don't expect within the first 6 months that, you're going to be creating a lot of equity, because on a fixed 30-year fixed mortgage, most of that payment is going towards interest, but, it's not putting that much towards the equity of the home, but, so the equity doesn't grow very fast. And then also too, a potential downside is, when we went through the mortgage meltdown of 2008, people were owing more on the balance of the mortgage than what the home could actually be sold for. So there's always the risk that the values can go down, but we know over time that they always go back up. And then, it is a piggy bank, but it's not the type of piggy bank that's, immediately accessible. So it's not very liquid. It's like you only you realize the equity once you sell the home, or if you refinance to take a cash out, but it's not like, you've got the cash on hand, so it's not very liquid. So that's just, some of the disadvantages of owning.
Thank you, Jim. Scott, can you talk to us a little bit about the pros and cons of renting?
Yeah, most definitely. So there's a few that I wanted to touch on here. First one is the repairs are not your responsibility typically. So the property owner usually has to pay for maybe that leaky faucet or anything else that maybe that breaks or wears out. So that's definitely one of the pros. Flexibility. It could be maybe new into your career, or maybe not even sure what career path you want to go down, and you may be looking to move after a year or two. So that's definitely something where you can be flexible. Low upfront cost is something as well. Typically, you do have to pay maybe a first and last month's rent, but besides that, there's no major down payment that you need to pay. As far as some of the cons, you can't really change or improve the property. So if you wanted to maybe say put a deck out for entertaining, would you prefer a fenced yard, things like that, you can't really do. And kind of along those lines, if you are able to do that at, say, a rental home as opposed to an apartment, you're actually putting that money in and building the value for the owner of the property, and you will not get that equity back whenever you move out. Another one is your rent may increase. You could maybe be on a 1-year lease agreement, and after that it could go up. Another con that last one here that I'll touch on is your credit score. If you do a great job of making your rent payment, you're really not improving your credit score any, which will in long term will be nice to be able to increase that, improve that, so you will be able to get a mortgage and maybe an auto purchase one day and things like that.
Awesome. Thank you, Scott. As Jim mentioned before, we do have something called down payment assistant that we can assist you with. So Shadante, do you want to tell us a little more about that?
Yes, thank you, Brooke. So Jim talked about the upfront cost of home ownership, particularly with the down payment, closing costs, things of that nature. So there are programs that can help you with that down payment assistance. So Federal Home Loan Bank, we offer a number of different programs. So for instance, we offer programs for first-time home buyers, which means you haven't owned a home in 3 years. We offer programs for what we call community partners. So those that are employed in education, healthcare workers, police officers, firefighters, first responders. We also offer programs for veterans. So we offer a variety of products really help create home ownership opportunities for members in the community. The key thing you want to remember with these programs is that they are designed to serve low and moderate income home buyers. So that's where Scott and Brooke and the Peach State Federal Credit Union team can be very helpful because they can help you determine exactly what the income limits are. They can help you determine whether or not you qualify based on your household income. And if you do, they can actually submit that application to Federal Home Loan Bank on your behalf. So you wouldn't be able to apply directly to Federal Home Loan Bank for the funds, but again, through Peach State Federal Credit Union, they can submit an application and they would provide the funds assuming you qualify. So the great thing about these products is that they essentially provide you with equity going into your home. The question of whether or not we have to pay it back is one that we get pretty frequently. And the answer there is if you stay in that home for 5 years, then there's no repayment obligation. So during the 5 years, you're not making any payments, there's no interest accruing or anything like that. But at the end of 5 years, it essentially becomes a grant. And if you, for some reason, have to move before that 5 year period, again, that's where the relationship with Peach State Federal Credit Union can come in handy because they can help you determine whether or not there is a repayment required. Generally, there's no repayment required if you're not making any money on the sale of that home. So again, Peach State Federal Credit Union is a great resource to help you access these programs and provide you with additional equity to get into your home. So definitely hope you will reach out and encourage you to take advantage of these programs if you qualify. So I will turn it back over to Scott.
Thank you, Shadante. That's great information there. Now let's continue talking to Jim about the preparation process and borrower eligibility that you should consider prior to engaging a realtor. So, Jim, what are three important things that people need to know about maybe their current financial or employment situation before calling Peach State or members first about purchasing or refinancing?
Sure, absolutely, Scott. Well, first and foremost, I think is probably the most important thing is understanding your credit. And how we look at it in the mortgage world is, we get what's specific. It's called a tri-merge report. It gets a score from Equifax, TransUnion, and Experian. And based on what we see on these three scores, we're going to throw out the high score, throw out the low score, and then your mortgage is actually going to be priced off that middle score. And so it's important that you pay attention to your credit, paying your bills on time, which means not 30 days late. It also means like if you have a credit card that has a $5,000 limit, that you keep the debt utilization low. So in other words, if you've got a $5,000 limit and you're at $1,000, that's only 20% debt utilization. That's good. That's what we want to see in the mortgage world is to have that available credit, but not really using it from month to month and keeping it low relative to the limit. And again, it's the difference between say, hey, if someone's got a 620 score, the rate's going to be 4.5, but if they have a 740 score, the rate could be 3%. Most people typically want to pay less on their payments. So that's a little bit about credit and how important it is. And then determining whether somebody can purchase or refinance, it's like, do you have stable employment? And so what we're looking for on the application is that, the borrower must have employment for a minimum of 2 years. If they just started a job and they were just out of like a trade school or a college, that's fine. They can be in that job for just 1 month, but we need to know what that prior history was. And if they were in, vocational school or college, just as long as we've got that 2-year history, that counts as well too. We're really looking for no gaps in employment. So, if someone worked for 6 months and they took 6 months off, well, that's not stable employment. If the borrower is self-employed, then we're looking for a 2 years worth of tax returns to be able to determine what their income is. And so it's a little bit tougher qualifying for self-employed, but that's what we need if someone's self-employed, 2 years minimum of tax returns to get their income to qualify. Now, there are some exceptions to it, and this kind of goes back to the credit report. You need to be upfront with your loan officer at Peach State, and have you had a credit event that was like, say, a foreclosure or a bankruptcy or a deed in lieu? Because, that's going to determine also, how long has that event season, is going to determine whether or not you could get that conventional loan or the FHA loan or the VA loan or the USDA loans, because all of them have certain timelines as to when those events, that you can get financing, and they have to be cured X amount of years. So that's a little bit about some of the exceptions for qualifying for a mortgage. And then, as far as like the loan process itself, I'm going to oversimplify it here, but, first step is getting pre-qualified. That's when you're going to meet with your loan officer at Peach State, and you're going to provide them your pay stubs, your W-2s, and some bank statements to show where the down payment's going to come from. And you're going to go through that and make a formal application. You're hopefully going to identify a property that you want to put an offer on, and that pre-qual letter is going to help you, when you make that offer, so that they're taking your offer seriously. So you get under contract then with your application, and then the next step that happens in the mortgage process is it gets into processing, which the processor is the glue to the transaction between the loan officer and the underwriter. And so she takes all the information that we've gotten from you, like the purchase contract, your pay stubs, your W-2s, your down payment assistance from Federal Home Loan Bank, and they submit it to underwriting. The underwriter is going to, look at the file and make sure that everything is submitted meets, the agency guidelines for your mortgage. And then they're going to approve that loan. And the next thing you know, it's like a closer is getting lined up for this, your purchase. And so we're going to take the monies that, you are putting for a down payment and the money that Peach State is providing for the closing. And then you have a closing, then before you know it, you're in that new home. So that's a little bit about the mortgage process.
Okay, great, Jim. Thanks for that advice. Now, sticking with Jim here, let's talk a little bit about refinancing and when to consider that, and also refinancing versus maybe a home equity line, or you may hear us say HELOC for short.
Sure. I mean, there's, when is a good time to refinance? Well, most of the time people are just actually looking to lower the rate. And so they want to save, money per month, based on what they're currently paying. And, there are some good reasons maybe to do a home equity line of credit, but the major reason why someone's going to look to refinance is that they want to lower their interest rate and they want to save money, or they want to shorten the term from a 30-year fix to say maybe a 15-year fix so they can, pay off their home and own it free and clear. Both of these, both a refinance, you can do a cash out refinance, so you could make some of those home improvements, but then there might be a better reason just to use a home equity line of credit, because there's really no cost to a home equity line of credit, whereas a mortgage, there are some costs involved with that. And the benefits of refinancing, though, is, really it's lowering your monthly mortgage payment. Who doesn't want to do that? And then also, too, based on when you bought your home, you notice that's like, hey, not only can I lower my mortgage payment, but I had this thing on there called FHA mortgage insurance, or I had private mortgage insurance because I didn't have a certain amount of equity because I didn't have a big down payment. Well, that's one of the other benefits of refinancing is if you've lived in that home long enough, you probably have more than 20% equity. So you can eliminate, the mortgage insurance payments, not to mention you can get a better interest rate. And then again, you could consolidate some debt. Some people have been impacted by COVID. And so they racked up their credit cards, and now they want to get rid of that debt. So they're doing some debt consolidation, taking some of the equity of the home and paying off that credit card just to improve their cash flow. And there still are some people out there that have an adjustable rate mortgage. And quite honestly, with rates being as low as they are on a fixed rate mortgage, who wouldn't want a 3% rate on a fixed mortgage? So those are some of the benefits of refinancing.
Okay, great info. Thanks, Jim. So you maybe ask yourself, what is Peach State's role as your credit union partner in the home buying or refinance process? Well, we've been partnered up for getting close to a year now, and the membership, our Members First Mortgage and Peach State Federal Credit Union partnership has been great. And it's just another way that we show that our commitment to our members to be the source of relevant information and resources to help you move forward in your purchase or potentially refinance. So feel free to reach out to us, and you do have to become a member first. We can set up a membership account with Peach State. And with that said, I would like to go back and see if we have any closing comments. And Jim, we will start with you.
Well, hey, thanks, Scott. Yeah, again, I'm just Jim Dymock with Member First Mortgage, and again, we would love you to reach out and become a member with Peach State. They offer some closing costs that are very, very unique and low as compared to the market around Atlanta. And so I would really highly encourage y'all to reach out to your local loan officers at Peach State.
Okay, great. Thanks, Jim. And Shadante, how about you? We'd like some closing comments.
Yes, thanks, Scott. So again, just want to encourage you to reach out to your Peach State team and determine whether or not you would qualify for the down payment assistance. I will tell you, we do still have money available for this year, and we will more than likely start over with a new allocation in January. So definitely encourage you, if you're eligible, to take advantage of those available funds. Thank you.
All right. Thanks, Shadante. And Deirdre.
I just want to say congratulations, Scott and Brooke, on assembling an amazing group of individuals. Our nonprofit has been fortunate to be partnered with Peach State for, my goodness, over 7 years now that I've known you all, and you all have grown exponentially. And I will just say to you all, if homeownership is on your bucket list, you need to give Scott and Brooke a call, because they know what they're doing, and they've got the team of individuals right there to help you get it done. So again, thank you to everybody. It was great meeting your friends today, Scott and Brooke. Thank you.
Yes, thanks again to each of our guest speakers today, and Deirdre for helping to get this webinar going. If we can be of any assistance, please feel free to reach out to Brooke or myself, as we would love for Peach State Federal Credit Union to be your financial institution of choice. We are a full service credit union offering everything you can imagine, from a checking account to commercial loans and, of course, mortgages. So thanks again for everyone being on the webinar today, and thank you very much.
Bye, everybody.
Bye.
Bye.
Bye.